Are you a managing authority of European structural and investment funds and would like to use financial instruments? For the programming period of 2014 till 2020, an ex-ante assessment is a crucial mandatory step in the overall life cycle of financial instruments, which will help you map the investment needs in your area and to identify the role financial instruments can have in the achievement of ESIF policy objectives. It may sound very complicated, but in this video we will show you how the following 7 steps will pave the way for the successful use of financial instruments in your country and region. The ex-ante assessment can be grouped into 2 main parts: the market assessment and the delivery and management part. The first step in the market assessment is an analysis of the market failures and suboptimal investment situations. Find out whether your market is functioning at the moment or not, whether the kind of projects you want to realise face an investment gap, and if financial instruments are the best way to fill this gap. The best way to start is to look at your territory or sector and analyse whether all the opportunities are fully exploited, bearing in mind the specific thematic objectives and the priorities of your programme. For example, let's say that businesses and individuals produce too many greenhouse gas emissions and that they don't have access to finance for investment in energy-saving measures. The region has identified this market failure and has decided to support investment in green technology and energy-efficient housing, with loans that have a lower interest rate and longer maturity than the private sector is willing to offer. This means that investment projects are unlocked and the region can meet its carbon reduction targets. Another possible problem could be suboptimal investment situations, that there is a gap between the demand and supply of investment. For example, you may have a region with a lot of universities, but very little investment in research and development. What could be done to boost innovation and attract entrepreneurs? The region found that there was an insufficient supply of risk capital to further develop research from the local universities, and has therefore, together with a venture capital firm that's already active in a different region of the country, set up an equity fund which targets young, innovative companies. Mapping market failures and suboptimal investment are crucial steps in understanding the needs you want to tackle and the dimension of your financial instrument. A good starting point for this part of the analysis is already existing data and literature. You don't need to reinvent the wheel here. Just pull together relevant existing resources and draw conclusions regarding whether further investment is needed in your country or region. If you don't have sufficient data available and want to dig deeper into the underlying reasons, you may also conduct your own analysis, for example by performing a survey among potential final recipients, organising interviews with the key stakeholders, or setting up a panel of experts or a focus group. All these tools can be combined in order to get a better picture of the current situation and the needs in your area. In the next step, we need to explore what the added value of a financial instrument is. The added value can be demonstrated through the revolving effect of financial instruments because the support is paid back, and those resources can then be used for further investments. Financial instruments bring added value also through their ability to attract additional public or private resources and through improved financial sustainability of the supported projects. It is very important to put your financial instrument at the heart of your programme strategy. You should also evaluate whether there are other policy tools that could be a better fit, or it might be more efficient to combine the financial instruments with other types of support, for example, grants. This lets you demonstrate that the envisaged financial instrument has a higher value added than the possible alternatives, and that it's therefore the most efficient use of ESIF resources. However, you should be aware that, just like grants, financial instruments may cause possible market distortions and have state aid implications. should also check how you could mobilise any additional public and private resources. In doing so, we recommend finding ways to align private interests with the policy goals. We're also talking about the leverage effect here. Leverage is the sum of the total amount of ESIF funding plus the additional public and private resources raised divided by the nominal amount of the ESI fund's contribution. The leverage varies between individual financial instruments, depending on their ability to attract further resources. For example, the ESIF contributed €10 million to a financial instrument that gives microloans to young entrepreneurs. The region also contributes €10 million, and the bank implementing the scheme another €20 million. So we end up with a leverage of 4. The ESIF contribution allowed for 4 times the investment, thanks to public and private investors. This is one of the main benefits of financial instruments, the possibility of sharing risks and raising additional funds. We should also consider lessons learned from past projects where financial instruments were used. What can you improve or change in the future to achieve better results? What were the success factors and pitfalls? Could you look at other territories or projects and learn from their experiences? Methodologies like risk analysis and SWOT analysis are powerful tools to help MAs improve their decision-making process. This step allows you to fully understand the feasibility of the implementations and the needs of your organisation in terms of capacity and capability, as well as your financial ecosystem. It will also help you decide on the most suitable delivery and management structure. When you've gone through these 4 steps, you've come a long way in better knowing your market as an essential part of the ex-ante assessment. Here is a short checklist of what you should have done in this first part. 1. Mapped out market problems. 2. Understood the added value of financial instruments. 3. Looked into availability of additional resources. And 4. Identified good practice, pitfalls, risks, and opportunities. Based on the result of the analysis, we can now prepare the delivery and management part of the ex-ante assessment. In this step, you're going to define the proposed investment strategy. In order to elaborate a sound investment strategy, you will need to define the scale and focus of the financial instrument and identify the target final recipients. You should also consider which financial instrument is more appropriate, following the market assessment. For example, loans, equity, guarantees, or a mix. Should it be an off-the-shelf or a tailor-made product? Should it be combined with a grant or not? Should the financial instrument be linked to one or several ESIF funds? Which governance structure would be the most suitable for the implementation of the financial instrument? Multiple implementation options are available to fit different instruments and areas of application. The managing authority can contribute funds to an existing EU-level instrument or provide loans and guarantees directly. However, it is most common to deliver financial instruments set up at the level of the member states or regions through a financial intermediary, possibly under the umbrella of a fund of funds. Another important part of your investment strategy is to decide what short-term and long-term results you would like to achieve with your financial instrument, and to make sure that they are coherent with the thematic objectives of your program. Remember that you will need to provide evidence of your financial instrument's contribution to the overall results of the program. In this step, you should think of indicators that will help you monitor and evaluate how effective your financial instrument is. Once this is done, you will have a set of indicators which are used to quantify the expected result of the financial instrument in line with the overall programme indicators. As in any intervention, conditions may change before and during the implementation. All of these may influence the effectiveness of your financial instrument, and some of your assumptions and conclusions in the ex-ante assessment may no longer be valid and will need revision. Therefore, regular updates of the ex-ante assessment can be done before or during the implementation. So, let's summarise the important steps in the delivery and management part again. 1. Select the financial product to be offered, identify the targeted final recipients, and define the most suitable governance structure. 2. Quantify expected results of the financial instrument and select your indicators. 3. Establish provisions for update. You are now ready to make a sound decision on where investment is needed in your country or region, and whether financial instruments are the best option to put the projects into practice successfully. If the ex-ante assessment confirms that a financial instrument will be useful, your FI will start its journey and you are prepared to take the next steps. For more detailed information on how to conduct an ex-ante assessment, please refer to the material available on the FI Compass platform, www.fi-compass.eu.